Hello everyone, and welcome to another weekly installment of Hack.com's webinar series. My name is Sam Borgi, Chief Editor at Hacked. Thank you for joining us today. You know, it's never a dull moment in the cryptocurrency market. I think many of us have realized that over the past 2 years or so. There's never a shortage of information to capture, never a shortage of developments that we need to cover, and this week certainly was no exception. From the perspective of price action, we've leveled off quite a bit in the past few weeks. But nevertheless, there's a lot of developments in the market on the regulatory side, on the business side, on the ICO side that are always making for very interesting and very timely news items. So over the next little while, I just want to navigate you through the week that was in the market and draw your attention to some of the upcoming themes that could impact trading in the first full week of March. If you have any questions or comments, please email me at sam@hack.com or visit us at hack.com. We are active on Workplace. You have our YouTube channel now. Send me a message and we'll talk about anything related to the crypto market. We look forward to hearing from you. So the agenda for today, we like to keep it nice and simple on our weekly series here. We want to give you a weekly recap of the market developments, of the main market developments that happened throughout the week. Of course, we want to focus on the global crypto market, looking at the market cap for all cryptocurrencies. We want to also give you a recap of the developments on hack.com. And of course, what to watch for heading into next week. So when it comes to the weekly overview, we saw the cryptocurrency market stabilize this week. We did see gains in terms of overall market cap, but nothing like we've seen in the past. So it seems like the market is in a bit of a consolidation phase. However, the fundamental indicators do seem to show momentum returning, momentum building. When it comes to Bitcoin, we saw prices break above $11,000 on a couple of occasions this past week. I believe the high was around $11,200 for a total market cap of around $187, $188 billion for Bitcoin. It has been range bound between 10 and 11,000. There's some indication to suggest that we may be breaking above that level, although technical traders still want to see some more convincing evidence that's going to happen. Overall, we saw some notable movements in the broader altcoin market. We saw Bitcoin Cash, for example, put up some firm gains earlier this week. We also saw Nano and a bunch of other coins also put up sharp gains. Nothing really meaningful in terms of overall growth. However, stability in this market is a pretty good thing given what we've experienced recently. We saw Litecoin prices stabilize this week as well. As you know, LitePay failed to launch earlier this week. It's been delayed. Litecoin had gained considerable traction on the announcement of LitePay, as well as on the fork of the Litecoin protocol into the LCC cryptocurrency that has pretty much faded into oblivion since the hard fork. Actually, I haven't taken a look at its price in a little while now. We should probably cover that into next week. We'll make a note of that. Some of the noteworthy news items, of course, Venezuela. We captured this one last week, but Venezuela launched its Petro cryptocurrency. Maduro, the president there, you have to take his word with a grain of salt. He's currently involved in steering what is probably the worst economy in the world. Another failed socialist communist experiment. Venezuela gone wrong. I can spend an hour talking about Venezuela, but I'm not going to. Nevertheless, he talked about last week that the cryptocurrency that is run by the state, Petro, raised something like $735 million in its first day. He has also said via Twitter that the new project, the new coin, has received interest from 171,000 investors. That's mostly individuals, but also businesses, all looking to take advantage of Petro. Obviously, many other countries are also considering a state-backed cryptocurrency. We know Turkey, Iran, Russia, who else? Kazakhstan, Estonia. A bunch of countries have thought about or mulled the idea of a state-backed cryptocurrency. Of course, in my opinion, it's not really a cryptocurrency in that sense. If the state is backing it, the whole point of cryptocurrencies initially was the decentralized element of the market. Decentralized, not one entity controlling the means of production of currency. That's what central banks are. Central banks essentially control the size and the growth rate of the money supply, and they do it as they see fit. The idea behind cryptocurrencies is that this market is decentralized. But of course, I don't want to digress too much. This market is highly diverse. Not every coin is the exact same. Not every coin offers the same benefits. Not every coin even has the same goals. So there is some leeway in terms of how we interpret cryptocurrency, but a lot of us really look at it and think of decentralization, decentralized ledger. That's the merit, the major merit behind cryptocurrency, at least Bitcoin and some of the bigger altcoins. But that's, the tension that we're seeing between the state-backed cryptocurrency and the traditional view of cryptos that many of us who've been involved in the market for a while understand. In terms of other noteworthy items, we also know that the SEC, the U.S. top security regulator, has been probing the cryptocurrency market. The Wall Street Journal reported that, I believe it was on Wednesday, the report came out, Wednesday afternoon, Wednesday evening. I'm subscribed to WSJ, so I got the notification. Then, about a day later, we saw, on March the 1st, there was an SEC filing that surfaced, and it was actually T0s, right? Overstock's T0. It surfaced showing that, yes, this investigation is underway and that T0 has been part of the investigation. Nothing bad has happened yet. There isn't any sign that any ICO project or cryptocurrency has gotten their hands slapped by the SEC. But we do know that the regulator has subpoenaed dozens of companies and individuals involved in ICOs and involved in the cryptocurrency market. I believe the nature of the T0 investigation, or probe, I should say, which is simply a request for information. I believe it was a request around the token economics and how the supply is created and how the price is evaluated. So we know the T0 project has been touted at $250 million. I know we saw earlier estimates ranging up to $500 million. It's raised about $100 million based on the December pre-sale, from what I recall. But that one is going to sell out really, really fast when it hits its next stage. So lots of developments in the market. Regulation is one of them. Obviously, the SEC is paying close attention to the ICO market. When it comes to Bitcoin, this is the price action that we saw over the past, I would say, month or so. Really since the 23rd, which is about a week-on-week change, we saw prices rise about $800. So the market is gradually stabilizing after peaking closer to 12,000 in mid-February. Now, the global cryptocurrency market, of course, we capture this on a daily basis. We're looking at a market of around $460 billion. At last check, it was between 455 and 460. It hit, I believe it hit around 510 to 520 billion a few weeks ago. Overall, this has been fairly stable since the past week and a half. Week on week, we have seen some incremental gains as the market dipped down into the 420s before rebounding up to where we are now. No real major developments from a holistic sense in the cryptocurrency market. Now, that's cryptos. We also capture stocks. We also follow the dollar. We follow currencies. We follow commodities. And this week we saw another turbulent period for the U.S. stock market. And of course, Wall Street tends to have an outsized or an oversized impact on the broader financial markets globally. So we saw the S&P 500 and Dow decline rather sharply this week as volatility rose again. There was a lot of reasons for the decline. One of them was oil price volatility. This was earlier in the week, and I wrote an article about this, about how the oil industry is facing its same old problem as before. As U.S. shale ramps up production, the U.S. oil industry had its biggest month ever in November, according to data provided by the Energy Information Administration. Over 10 million barrels per day were pumped in the U.S., making the world's largest economy the world's second biggest oil producer. Who would have thunk that, about a decade ago or a decade and a half ago, when the U.S. seemed to have been staring down the barrel at an energy crisis, at least in the natural gas sector. So we're expecting oil production in the U.S. to top 11 million barrels a day, perhaps even this year. Got to hand it to the shale producers. They're very efficient, and they're taking those Middle Eastern producers, they're giving them a run for their money, right? Because $60 a barrel for a shale is profitable. There's a chart that was circulated, I think it was on Bloomberg a while back, that showed the break-even point for a lot of these U.S. producers was something like below $40 a barrel. So huge efficiency gains in U.S. oil. That could pressure markets moving forward. In the latter half of the week, we also saw rate hike jitters resurface, as well as trade wars after President Trump announced fresh tariffs on steel and aluminum imports. We don't know when this is going to be implemented, but now we know that steel imports to the U.S. will be subject to a 25% levy. The aluminum sector, aluminum products, will be subject to a 10% levy. We don't yet know which countries are impacted or which products are impacted, but that was the main announcement of Thursday, and that seemed to have kickstarted another rout in the equity markets as investors became concerned over escalating trade wars. Trump has since defended his position, even on Twitter, talking about trade wars are a good thing and that we can win them. So it seems like that's been the focus, trying to get America's finances back in order, at least the trade deficit back in order. So we're not expecting that to go away anytime soon. We definitely saw it with NAFTA over the past few months. And the CBOE VIX is trading around a historical average. It closed below 20 on Friday, but not so far off that historical average. In terms of the developments on Hacked, as you know, we're pumping out articles regularly. I mean, I'm chief editor to Hacked, but I also write a lot of articles every week. We delivered several ICO analyses this week, including data broker Dow, The Abyss, and some others. I actually wrote about The Abyss, it was either last week or the week before, talking about how it's embracing the DACO model. We know that Vitalik Buterin, the founder of Ethereum, has developed a new protocol for ICOs called DACO, essentially providing more transparency in the market, giving investors more of a say in how the funds are allocated, or if they're allocated at all, after the token sale. So the DACO model does have a lot of promise to fix a lot of the ails of the ICO market. The Abyss seems to be the first project that is embarking on a DACO model. You can read the ICO analysis of that on our website. In terms of the most read articles of the week, there's the article I wrote there on Litecoin recovering after a massive slide, as Charlie Lee makes a bold prediction. The bold prediction that Charlie Lee made was that Bitcoin, or that Litecoin, would surpass Bitcoin Cash this year. So just to kind of get a sense of how that is, or where we are in terms of prices, at last check, I was on coinmarketcap.com. I saw Litecoin at around $213. I saw Bitcoin Cash at around $1,274. That's $1,274. So can Litecoin make it? There's no reason why it can't. And it seems like Charlie Lee is very confident that it can. So keep your eye on Litecoin. It's already one of the most promising platforms on the market. There's a few others that I have as favorites. Litecoin is one of them. Speaking of favorites, my article on Stellar Lumens cracks the top 5 again, why I'm bullish on Stellar Lumens. Everything from the ICO potential to the business partnerships to the leadership, Stellar seems like a stellar project. And you can read more about that on our site. Articles on Bitcoin is clear and unmasking Satoshi Nakamoto are also in the top 5, as well as the speculation or analysis on why the cryptocurrency market is stuck at its current pace. Looking ahead to next week, we are focusing again on the cryptocurrency market. It is stuck in a range that hasn't changed since last week. We are, of course, looking at Trump's trade war. There's going to be a lot of speculation about how that's going to unfold. In terms of economic data, next Friday we have new U.S. non-farm payrolls. Now, let's not forget that it was a U.S. non-farm payrolls report last month that triggered essentially the biggest spike in volatility of all time, at least in the VIX's almost 30-year history, right? U.S. non-farm payrolls report also includes a data set on average hourly earnings, which are, of course, a proxy of wage inflation. And average hourly earnings hit 8-year highs in January. So that was part of the events that triggered the huge collapse in stocks, of course, because higher inflation means the Federal Reserve will raise interest rates more quickly. At least that's the conventional wisdom. And that, of course, for many signals a potential downturn or potential headwind for stocks. We are, of course, monitoring Bitcoin's dominance. I did write about this a few times during the week. Over the past month, Bitcoin's share of the total market has increased substantially, about 9 percentage points. At its lowest, Bitcoin was valued around 32% of the market, overall market cap. At last check, it was around 41% of the total market. And in terms of trade volume, Bitcoin is around 40 to 41%. So Bitcoin's dominance has increased amid the broader lull in the market, signaling that, maybe traders are backing off some of the speculative altcoins and going back to Bitcoin. Monetary policy chatter will continue ahead of the Federal Reserve's March 2021 meeting. Other central banks are also scheduled to meet very, very soon. That covers it for this week. Everyone, I hope that it's been informative. Thank you for listening. Again, reach me anytime at sam@hack.com and visit us at hack.com to get more information about the cryptocurrency market, about finance in general, and about how you can develop a optimal trading strategy, whatever your goals might be. This is Sam Borgi signing off. We'll see you again next week. Take care.